Just let me know when. Good day, everybody, and welcome to the VectorVest International User Group Forum. It is Saturday, November 1st, 2025. Hopefully, everybody survived Halloween. All the ghost goblins, ghouls, whatever else, running around trying to collect sweet stuff. So hopefully, and I guess Halloween parties as well. So hopefully everybody survived that. Well, thank you very much for coming out and joining us. As most people know, this is broadcast live on the VectorVest YouTube channel. So please make sure your computer speakers are turned on and turned up so you can hear the audio sessions. And the recording will be available shortly after the webinar is finished, for those wondering about that. So when you chime in the chat, let us know where you're tuning in from. This is the International Forum. So typically we're seeing people from all around. We'll just take a look. Hey, Jerome, we got Jerome in Naples, Florida. There's Neil from, I think you're in the Toronto area, Neil. Blaine, who's down in, where are you now, Blaine? Mendina. So in Colombia. Good to see you. There's Raphael from Calgary. We've got James. Oh, the Blue Jays fans. Blue Jays fans probably not happy about the outcome of last night's game, but they get one more chance tonight. So Blue Jays and Dodgers in the World Series. There's Richard from Maryland. Alan, too much candy left over. Yeah, time to fatten up for Christmas, I guess now, right before fatten up for the New Year's. Jim from Florida. Hey, Peter, Antwerp, Belgium, checking in. We've got James from Happy Valley, Oregon. And there's Missouri, Bill in the house. Hey, Haas from Decatur, Alabama. We've got Badger, Pembina, North Dakota. There's Peter from Barrie. We've got Mike from Beaumont, Alberta. Bob H. Stratford, Ontario. Hey, Carol, Georgia, right, Carol? Can't remember the exact town or city you're from, but I know Georgia for sure. There we've got Ch from, looks like Toronto. We've got Louisiana in the house with Brad. There's another Belgium, Eric, Kirby, Florida. Hey, Kirby. There's Carlos from Detroit, Salem, Oregon with Dennis. Mark from Ashland, Pennsylvania, and more people coming in. I'm going to have to skip some, unfortunately. Sorry, folks. Try to welcome everybody, but a lot of people coming into the house. We've got Gil from Montreal. There's Tom from Burlington. Dory from Florida. There, Augusta. Yeah, Augusta, Georgia. Now I've got it, Carol. Shahid from Florida as well. All right. What else? Lexington, South Carolina, and Oakville for Marguerite. Okay, folks, we've got a pretty packed schedule. It's always tight to get through, so we will move on and let's take a look at the risk disclaimer. So as everybody knows, there is risk in investing. Everything you will see in here today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so that brings us to the agenda. Once again, my pleasure, folks, to be able to host the International Forum. We will be taking a look at the global market review, as we always do. We'll have some trade ideas section. And the keynote presentation, I am joined by none other than Mr. Todd Shaffer, Manager of Research, and his keynote presentation will be entitled Why Smart Money Loves Hated Industries. Now, we're not showing Todd yet. And I know, we're in a world now, folks, where we can bet on anything. You have these predictive markets and forecast markets. So I think we should start a bet on what kind of Hawaiian shirt that Todd is most likely wearing for his presentation today. What do you think? All right. So, and we'll get all of that in before adjourning somewhere around 12:30. As I mentioned already, with this being on the VectorVest YouTube channel, recording will be available pretty much immediately after the webinar. All right, so let's jump in right into the global market review, and let's see what's been going on. There definitely is quite a bit going on with the VectorVest indicators. If we look at the market timing graphs, you know, it looks like the last month or so, in most cases, we're pretty much trading in a range. But let's just jump in here first. So we've got Canada here first. Here's the color guard for Canada. All right. So you can see that Friday, market timing gauge needle was straight up into the yellow. We've got guidance that reads the color guard is neutral. VectorVest does not advocate buying any stocks at this time. That gauge and that guidance, folks, get used to that. Now, last month, I think we were looking at everything green and color guards without red lights at all in most cases. But you can see in the Canadian color guard here, red lights. So we're looking at a mix in the 2.5 weeks of that extended color guard we're looking at. And you can see we've got a mix of everything. And this is going to be a common theme this month here. What we've seen in October so far. You can see we're going from red lights in the price column to 3 green lights across the board, back to a red light in the price column. And then we've got a lot of yellow, a few greens mixed in there. We've even got an RT kicker combo confirmed red light on Thursday, and then 3 yellows across the board on Friday. But overall, one of the things you're going to notice is our proprietary market timing indicators declining. All right. So definitely over that period. And I can tell you for the Canadian market, all 4 price RT, BSR, and the MTI were all down week over week. All right. But you can see MTI in Canada has been elevated at toppy levels for quite some time. That just ended this week with the MTI moving from 1.22 to 1.16 from Wednesday to Thursday. So you can see Canada in a down-up situation, short-term downtrend in an underlying uptrend, and we'll run through. We'll look at the year to date. So for the Canadian VectorVest Composite, 14.2% year to date. And now we'll take a look at a summary of our proprietary market timing signals. So you can see the confirmed calls remain up since the 2nd of May. The DEW, it was up for some time, just got whipsawed in the Canadian market. So that turned back up on Friday. Green light buyer, neutral since the 28th of October, and the primary wave turned down on the 30th of October. All right, so all last couple fairly recent changes. Looking at the US, here you can see, once again, market timing gauge needle straight up into the yellow, exact same guidance, folks. So VectorVest not advocate buying any stocks at this time in the US market. And I think we're seeing the changes quite a bit more in the US market. You know, look at the mix. This is what Todd, we've got Todd with us, refers to as the Christmas tree color guard. And you can see that we've got a mix of everything in here, much more so than what we saw on the Canadian color guard. The other thing to take note of is you notice on the Canadian side, our indicators still operating above 1. The US side, all of them now, RT, the BSR, MTI, all drop below 1. I know we've seen this kind of play out before, back and forth in this latest run-up since April. However, one of the things to note here is now the MTI on the US side has joined the club and dropped below 1. So you can see it at 0.99 on Friday. All right, so that puts the US in a down situation now, short-term downtrend in an underlying downtrend. Nobody is saying that market can't pop on Monday. We have no idea what news threads are going to come out over the weekend, etc. but definitely some changes to pay attention to here, folks. All right, so we can see year to date, the VectorVest composite, 9.8%. And looking at the summary of the market timing signals here, confirmed calls turned back up on the 24th of October. The DEW, so a lot of whipsawing of signals, and the DEW, I think Ron was mentioning in the timing the market last night. We saw 7 changes just in the last week or two with the DEW. The DEW turned back down on the 30th of October. The green light buyer neutral since the 28th of October. And there you can see the primary wave down since the 30th of October. Here's a summary of all of the VectorVest nations. So you can see October. Looks like the European Union started their, remember, what was it? End of last year, going into the beginning of this year, the European Union was really outperforming the other markets, and it looks like they picked up again. So October, they're the leader, up 2.32%. You can see the US, the only one on the negative side, just a negative 0.08, just enough to blow over, I guess. Year to date, looks like Canada at 14.20, leading their year to date, followed by the European Union, Australia, and then the US. So, you know, commodity, definitely the commodity rich markets have been doing fairly well, although gold has been taking a hit the last couple weeks. All right, so that takes us into, here's Australia, land down under. You can see exact same market timing gauge needle, exact same guidance. VectorVest does not advocate buying any stocks at this time. And we can also see that trend of the Christmas tree color guard, where we can see everything included in there. Now, with Australia, you can see the BSR has been bouncing back and forth, dipping below 1, kind of like we've seen on the US side. So dipping below 1 and then getting back close, actually got up to 1 exactly on Friday. The MTI hasn't dropped below 1 at this point. All right, still at 1.08, but we're definitely possibly seeing, you know, the symptoms of a market, a toppy market that may be looking to turn over. Down up situation there as well. All right, there you see the 10.1% year to date, and here is the summary of the market timing signals. Confirmed calls up since the 1st of May. The DEW up since the 5th of September. So they had a little bit of a whipsaw there in September of the DEW. Green light buyer, neutral since the 28th of October. And the primary wave went down on the same day, the 28th. European Union, there you go. All 4 of them. Same market timing gauge position, same guidance. So not advocating buying any stocks at this time. And look at the color guard for the European Union. It's the only one that has escaped a red light in the last 2.5 weeks. All right, you can see all of their market timing indicators still operating above 1. Their MTI is still up at 1.43, but they did lose the primary wave on Friday, so that changed them from an up to a down. There you can see year to date 10.73%. And looking at the market timing signals, their confirmed calls up since the 29th of April. The DEW has been up since the 8th of September. Green light buyer, neutral since the 28th of October. And the primary wave, as we mentioned, turned down on Friday, the 31st of October. All right, so that's basically the color guard review for the VectorVest world here. So a lot of back and forth with a lot of the indicators that we've seen. Here's a market timing graph, this one for Canada. So we mentioned the indicators really starting to, once again, give signs of a possible rollover. Of course, we want to make sure we see that happen before we react to it. Looking at the Canadian market timing graph, you can see that at least visually here, you can see the indicators still all operating above 1, but we're losing broad market support, and we're seeing that across the board for the most part, with the buy to sell ratio decreasing. And here you can see clearly the MTI buy to sell ratio and RT putting in lower highs. The high, the 52-week high, now about 2.5 weeks behind us. And as we've talked about, in the last month or so, the market really hasn't gone anywhere. Canadian market finds itself pretty much on the same line of support here, waiting on Monday to see, after a bit of a bounce on Friday, if we continue to see uptrend there. Or whether the market decides to break down, but definitely consolidating for the last while. All right, and we'll see the same picture switching from one country to another. Here's the U.S. So the U.S. has been range bound for the last while, in between the levels picked up by the support resistance indicator, resistance here, support here. So you can see they've been in between those levels for a period of time. And once again, kind of hanging out between two lighter support and resistance levels of a bit narrower channel in between those other levels. All right, we can see the market timing indicators on the graph on the US side operating below 1, MTI just below 1, but the buy to sell ratio in RT a little more seriously below 1 at this point. One thing to keep in note in the US market, so we can see with the confirmed calls on here, we have been seeing some changes or oscillations in the confirmed calls, and we could possibly see that again with the primary wave going down in the U.S. market. Went down on Thursday, which means this coming Thursday, if the market continues moving down, could be a possible change in confirmed call again in the U.S. market. So keep an eye open for that. All right, here's Australia. So there you could see the market timing indicators. Looks like we saw the buy to sell ratio just get right back up to 1. The other two operating above 1, as we saw in the color guard. And also the Australian market staying pretty range bound in between support and resistance. You can see the 65-day moving average right in line with that other line of support that I added in there. All right, so they had a bit of a bounce on Friday too, and are looking for a support right in around the level they're at to see if they can bounce. Looking at the European Union, there you can see all of the market timing indicators all operating above 1. There you can see that confirmed call way back there. And once again, they're hanging out closer to resistance, a bit of a pullback. So you can see for the past week, they've been putting in down days. We mentioned they lost the primary wave again. They've been able to avoid red lights, but if they keep pulling back, that'll obviously change. But they're closer to resistance than they are to support at this point. And you can see the 65-day moving average right up to this support level at this point as well. All right, so that brings us into looking at the global market tracking ETFs, these found in the US software. All right, we've got a comparison of September to October, and we have seen some new players come in. We've seen some of the ones from September pick up. So South Korea, you can see, was in third place in September. Now at the top of the list, Chile wasn't in the list in September. It's come right up into second. The NASDAQ still trying to hold strong here, as well as the Dow Jones, rounding out the top 10. But you can see some of the players there. And we can also see a change here too, folks. You can see back in September, out of the 43 ETFs, we had 38 winners, 5 losers. For October, 28 winners, 15 losers. So you're also seeing a bit of a change in performance. Now, the basket was able to see a gain of 1.52%, outperform the VectorVest composite, negative 0.08%, as we mentioned. But you can see that, well, as a basket, still outperforming, maybe to about the same level we saw in September. All right. And interesting to see, some of the players in there: South Korea, Chile, you got Taiwan, Poland, just looking at the countries here, emerging markets, Asia, Japan, India in there. All right. Next, we see the global market tracking ETFs. October, that's just what we saw on the right side, moved over to the left side here, but concentrating on year to date. So here you can see the year to date picture. Has been a pretty good year. Out of the 43 so far year to date, 41 winners, 2 losers. And you can see some of the returns in there. South Korea up 90.61%, really putting up a good fight against gold in the last year. So some pretty good returns there as a basket in the year, really outperforming the VectorVest composite, 28.38% to 9.8% for the composite. All right, so that'll take us to the market sector ETFs. Also in the U.S. software. So this is in the watch list, the cherry picking folder in the watch list viewer. Here you can see the 2025 year to date. As I mentioned, with South Korea really challenging gold, you can see gold still hanging in there with a pretty good gain. So we've got 30 market sector ETFs. 25 winners, 5 losers year to date. As a basket, 18.32% return. So also outperforming the VectorVest composite. And gold miners and metal and mining have been at the top of the list most of the year. You can see some of those clean energy. So clean energy, solar plays in there, as well as US telecom, semiconductors. All right, so we've got the top 10 in here. And yeah, with the pullback in gold, I would say, well, GDX did get up to about 130%. So it's taken about an 18% haircut. So GDX representing the gold miners in the US market. So about an 18% haircut just in the last couple of weeks, but still looking pretty strong at 112.5% year to date. We're also looking at the 10-day delta for the sector ETFs. So this GDX was at the top of the list last time around. Now we're starting to see some oil plays come in. So you can see Van Eck Oil Services. We've got semiconductors. Once again, solar. We got technology. We've got biotech coming into the top 5 here. Another oil play, the spotter S&P oil. That's XOP, XLE in there. All right, one of the ones we track for energy or petroleum on the U.S. market. All right, so a little bit of changing in the guard, at least over a 10-day period here. All right, good to keep an eye and see what sectors are starting to move and which ones were hot are starting to drop off. All right, so that brings us to the central bank rate announcements. I know October, uh, the end of October was really the main focus. So we have all of this behind us now, closed out October yesterday, going into November. Uh, the main ones we are interested in looking at, you can see the Bank of Canada cut interest rates by 0.25%, as did the US Fed. Bank of Japan held, but interesting. So interesting Fed speak. Pretty much the U.S. last meeting in December, it was pretty much looking to be a lock for another 0.25% cut. Powell kind of threw some water on that idea in his comments after the decision. So we'll have to see how that plays out. The Bank of Japan, on the other hand, held, but said that they were going to continue raising rates should conditions warrant. You can see the European Union held as well. So looking into November, um, you know, most of the main players out, especially the US, but we do have Australia coming in. So the Reserve Bank of Australia coming in, well, on Monday. So we're right back into it on Monday. We do have consensus and forecast right now. So looking at a hold there, we'll see whether that actually happens. And then the Bank of England on the 6th of November, looking for a hold there as well. I think those are the main ones we're interested in. You can see once we get to the end of November, right around U.S. Thanksgiving, we'll have the Fed beige book at that point. All right, so that's central bank around the main ones around the world. Here are the essays from yesterday, from this past week. So another great week of essays here, folks. We've got the summary of them all here from the US. Angela Akers wrote one entitled, "It's Best to Buy Rising Stocks in a Rising Market." Of course, one of the main mantras of VectorVest. All right. So how to use VectorVest to find great strategies that find the best rising stocks in rising markets. From Canada, Don Reitzma wrote one entitled "Understanding Reitzma's Net Nitro, Buying When RT is Less Than or Equal to 1.40. So Don goes into a pretty good explanation there of why that level was chosen and into some of his back testing strategies. From the European Union, Susan Hayes Culleton wrote one entitled Unisearch. So how to use VectorVest Unisearch tool to easily find stocks with upside potential that fit your criteria. And then Australia, Robert and Russell Markham wrote one entitled REITs Continue to Surge. So how to use VectorVest to find the best REITs with upside potential as market conditions shift in their favor. And, you know, the feeling is that as interest rates lower, that ends up being a good thing for REITs. And that's what they've been seeing out of Australia. All right, so once again, folks, I know it's these just came out yesterday. Hopefully you've been able to at least check out some of them. If you do see anything that interests you there, ensure that you go in. If you're using VectorVest 7, you can log into VectorVest 7, choose the flag of the country you'd like to go into, and then go to the views section, go to last Friday's views, and you'll be able to find the essays there. All right, so that's the essays. We're into a new month. We've got the November Almanac. So according to the VectorVest Almanac, the price of the VectorVest composite has gone up 23 times in the last 23 years, with an average gain of 4.1%, down 6 times with an average loss of 5.14%. Hirsch and Mistel Stock Traders Almanac notes that November starts the best 6 months period of the year. So based on the VectorVest Almanac, which shows a 79.3% win rate and a 66.7% win rate in post-election years, the odds strongly favor an up November. So we will see whether that ends up coming into play or not. All right. So that's the almanac. Here's an earnings update from Angela's essay yesterday as well. So we are in Q3 earnings season. And as of last Friday, as of yesterday, 64% of S&P 500 companies have reported, 83% beating earnings estimate, and 79% reporting revenues above estimates. All right, so far, fairly good earnings season. All right, that brings us to the trade sections portion. And for the trade sections portion, there's one part that I'm just going to talk about first here that I had somebody bring up to me. And I know you might not be able to see this, but interesting. I'm the kind that likes to dig under the covers of things, folks. You know, and I can tell you, you can almost look at anything these days, and you'll probably find the same answer, and maybe even more, not even as broad as this one. But and you can search this. You can just do a Google search with that exact title there. 182 beauty companies owned by 7 major leaders. I know you probably won't be able to see the small inside the circle names, but you can see the main player, the 7 main players they're talking about here: L'Oreal, Johnson & Johnson, Shiseido, Estee Lauder, Unilever, Procter & Gamble, Coty. Was talking to Clay and Todd about this before we started, you know, and in some of these companies like Unilever, for example, Procter & Gamble, Johnson & Johnson, they're not just in beauty products. Unilever's chemicals, they're in food, you know, so they're dominating not just one part of our businesses, but many different parts. And so, you know, if you look at hotel chains, for example, you'll find probably only 3 to 4 main chains owning all the smaller ones, or, you know, all of the other names that we notice out there. All right, but just kind of a sign of the times, and something that always makes me look back. You know, I'm always examining things, and you know, I ask a question a lot: are we truly still in a capitalist society? So something to kind of mull over. We won't get into too much here, but you know, one of the pillars of capitalism is competition. Capitalism is a pillar of, or competition is a pillar of capitalism, because you have to have it in order to keep prices low. So when we start seeing prices go high, maybe that's telling us that we don't have enough competition. All right. So anyway, just thought that would be an interesting thing to touch on. And maybe I'm going to look for a site that possibly does this across many different sectors. All right. So one of the things, we do have guidance, VectorVest not advocating buying any stocks at this time. So what I wanted to touch on fairly quickly here is I wanted to look at Unisearch. So Susan did her essay on the Unisearch tool. The Unisearch tool is such a powerful tool that can be used in so many different ways. Now, what I'm going to talk about here is how to streamline your watch list scans. So this happens to be, you know, so I heavily invest in the Canadian and the US markets, and I'm doing watch list scans in both. All right, now this is just on the Canadian side, and this is only a few watch lists that, you know, I'll typically be looking at. So you can see I've got each watch list here with how many tickers are inside each one. And, you know, these might have more in them now. I didn't update this again, but, you know, you can see this 2024-02 watch list has 61 tickers. We've got blue chip bargains with 58. This is a master retirement watch list, recently evicted. 63 tickers there. The master retirement watch list regular, 96. I've got a top 30 VST watch list, TSX 30 watch list. This watch list from one of our still active VectorVest user groups out of Saskatchewan with 60 tickers. So you can see the entire total here just on these watch lists is 397 tickers. Now, I'll be going through these at least once a week, every weekend, possibly during the week, depending on what's happening in the market. So you can imagine how much time it would take me just in one of these watch lists, this one, for example, to be able to go through 61 tickers. So one of the things that we're able to do, and I'm just going to go, I'll use the US software here first. And then I think while I'm doing that, let me just open up. I think I'm going to pick on the European Union this time. And just give me a couple seconds here. I'll get that one going. All right, so if we click on the Unisearch tab, all right, you can see, hopefully most people are familiar with the Unisearch. Very powerful tool for screening stocks. And, you know, we've got our built-in, all of the built-in Unisearches, the built-in folders, but you can also create your own, all right? So here you can see a lot of the built-in, like if I open search as prudent, you can see some of the searches in here, best of the biggies, best performers, greater than one, etc. Now you can also see, well, I guess I have Canada up here. All right, so you can also see that I've got my watch list filter searches folder right there. All right, and in here are a bunch of searches that I've created. So for example, if I want to look at the first one that I had in the list was basically that 2024-02 watch list. All right. So typically, two of my favorite searches are the NPI crossing 3-day and stochastics crossing above 20. Stochastics crossing above 20, my first favorite. All right. So you can see that I have a copy of the NPI crossing 3-day. But what I've done in here is, so this criteria will be the same. This is a copy of the NPI crossing 3-day that happens to exist in the NPI folder, where is it? Near perfect indicator folder right down there. All right, but what I've done is I've added an additional line in here where I'm looking at a stock watch list equals that 2402 watch list. So I'm going to go to stochastics crossing above 20 instead of the NPI crossing 3. So now if I run this search, I believe I said there were 61 tickers in that watch list. You can see if I'm looking for stochastic setups, I don't have to go through 61 charts now. I just end up with 2 charts. If I go, and I'm going to have to bring this over to this screen and just open a graph for both of these. Now I happen to have the MPI set up on here. I think I'm going to change that to just the VectorVest layout. And I'll add technical analysis. We'll add stochastics in here, and we'll add that to our graph. I'm going to take off the stop price for now. And usually, I typically want to see earnings per share. I'm going to just swap locations for that with the stochastics oscillator. So now, you know, if I'm looking for stochastic setup, I'm taken my list down from 61 stocks. I'm only having to look at 2 for this watch list, RSI Sugar. So you can see how that one shapes up, and Synovus Energy as well. All right, so if I go back to the slides here, what I've done is, and I think I forgot to take one of the slides out. This one looking at the US side, but I can tell you, you can put any flag on this, folks. What I've got here are the steps on how you would do this for yourself. So we've got step 1. What you're going to do is you're going to find or create a watch list. All right, so one of the things I did here on the US side was I created this for US Canadian interlisted stocks. So I specifically used that watch list. I'll bring up where's the US? US is here. All right, so you can see on the US side, I have the My Watch List filter searches. And if we go down to the bottom, you can see the US Canada interlisted. I've got MPI crossing 1 day and stochastics crossing above 20 in that case. So that was the one that I basically used as an example here. Step 2, you would create a new Unisearch folder. In my case, the My Watch List filter searches. Where did I get that name from? Well, that was what Stan ended up creating as a folder for his watch list filter searches. Step 3, copy your favorite searches. Step 4, save the search as a new watch list filter search into the desired folder, which would be your My Watch List filter searches folder. Step 5, all right, and this is optional. You can either delete the copy or you can leave it if you plan to use it for other things. I will typically always copy a search. I don't like to, play around with the built-in VectorVest searches, so I'll always create a copy and work from the copy. Step 6, you're going to add the watch list filter parameter in the search criteria. Step 7, run the search. And step 8, add your desired stocks to your watch list of choice. Last step, you're basically going to track those stocks for a trade setup, and of course, backed by market timing. All right, so I'm getting pretty close. Let's go to, I forgot to ask Todd in the beginning. What are you looking at? You need about 45 minutes, Todd?
I am a professional. I'll take whatever you give me.
That's the answer. That's the Todd answer right there. All right. So I'm going to pick on the European Union because I know that if I go to the Unisearch folder, I don't have a My Watch List filter folder in here. All right. So what I'm going to do is first, I'm going to put a new group in here. I'm going to have to bring this over. And I'm going to call this my watch list. I'll just call that my watch list search. And what didn't I do? It's going to be at the bottom. So usually with I'm just going to edit this for a sec. Usually with my folders, I like to put the little less than and greater than signs, which will end up, when we close and reopen, I bring it to the top of the list. So the next thing I'm going to do here is I'm going to go to Pro Trader, and I'm going to go down to stochastics crossing above 20. I'm going to copy that. So you can see in this group now, We've got a copy of stochastics crossing above 20. That keeps me from making any changes to the built-in search that we already have. All right. Now, typically, I can tell you, you can drag this copy over into your other folder, but definitely in the Canadian and US software, what happens when you drag is it starts opening these other folders. So usually what I'll do is I'll do a save as. All right, and when I do the save as, here you can see already my watch list search is up here. So I'll click that one. I can now take copy of off of that. And so I didn't do my watch list yet, but I'm gonna call this index and then stochastics crossing above 20. All right, I don't know which index I'll pick, but we'll see that as we go here. All right, so I'll click OK to that. So now you can see under my watch list search folder, you can see that I now have this index stochastics crossing above 20. That's the one that's highlighted. That's the one that we have here. So let's go into the Viewers tab. Let's go to Watch List Viewer. And then let's go to, so we have Exchange watch lists and we have Index watch lists. A couple weeks ago in our essay, Susan talked about concentrating on one country, for example. I know we had some folks in here from Brussels for sure. So let's go and let's look at the Brussels market. So we know we have a watch list under Exchange watch list called Brussels. All right, so all I have to do is come back to my search here, and we're going to go stocks, filter by. We're going to filter by watch list. All right, and then we're going to say equals because we want to match a specific watch list. Now we said we wanted to do an exchange watch list. We want to do Brussels. All right, so I've got that selected. One of the things I didn't do was, you can see there's 105 tickers found in the Brussels watch list. So if I go back to the Unisearch tool now, run that search, you can see no results found. If I go, whoops, yeah, I want to save that. So I will save that. I'm going to go back to the stochastics crossing above 20, run that search, and you can see right now we're searching the whole European Union database, and you can see that we're picking up, I have it at 10 stocks right here, so we are picking up 10 stocks. So right now in the Brussels marketplace, we don't have any stocks that meet that criteria, which means out of those 105 stocks, I don't have to look at any of them this weekend because none of them fit my criteria if I'm looking for a stochastics setup. All right, so hopefully everybody found that useful. As I said, the Unisearch, a powerful tool, and I think maybe this is just a repeat here, folks. I should have blanked this out, so I'm just going to go through this quickly. But it's the exact same steps no matter what country we're looking at. There just happen to be different watch lists there. All right. So probably not as widely used a feature as it should be to save you a huge amount of time when you are going through charts and looking for trading candidates. Now, some people love looking at graphs and can never get enough, but you can see with all those tickers I had, it would take a long time every weekend to go through all of them. All right, so that brings us to the end of this. Todd, we're ready for you, my friend. So
Can
feel free
anyone
to
truly be
chime in.
ready for me? Let's see, you probably need me to share my screen.
Yeah, Todd's gonna take over the screen share and his keynote presentation entitled Why Smart Money Loves Hated Industries.
Alrighty, and are you able to see the feed at all? I want to make sure that that's coming through.
Looking
We'll
good
get
on
some.
my end.
Okay. I was gonna say I'll run out to YouTube and get confirmation there, but you guys let me know if it's not for whatever reason.
You're looking
So,
good too. So whoever guessed no Hawaiian shirt, well, they would win that the predictive market forecast market.
well, it's funny you mentioned that because we had frost here last night. So I looked out the window this morning and I saw ice on the ground. I was like, yeah, okay. Fashion be darned. I'm going with a shirt that has sleeves. So here I am doing my Johnny Cash look. All right, so let's talk about why smart money loves hated industries. And we seem to have a lot of these themes kind of coming together here over the last several weeks, which is fine. We'll just keep uh, tilling that ground, and hopefully we'll give you some ideas that you can start putting together thematically for things that work for you. All right, so we're probably all familiar with that old adage that the secret to making money is to buy low and sell high, right? Dr. DeLito used to make this one of his patented speech uh, parts. So buying low, selling high, good advice. That's nice, but how do you know when a stock price is low? Well, the industry wisdom would say, well, you can't, right? So you should just buy stocks anytime you want. And maybe if it goes lower, you could even buy some more because that'll lower your average cost. Well, that rabbit can go pretty far down the hole. So not such a great idea, right? So Dr. DeLito offered the advice that how do you know when it's low? Well, when it stops falling. Well, how do you know when it stops falling? Well, when it starts going up, right? So that feeds into our mantra of we buy rising stocks in rising markets. Even if we're coming off of pullbacks or bearish market trends, we wait for the trend to turn. That's our evidence that the bottom is in to put probabilities on our side. So yes, we're going to give back a little bit off of the low, but the probabilities are so much improved, and the drawdowns that you would suffer trying to buy into that falling market get greatly minimized. So let's stop trying to catch the falling knife and let's just wait for the bounce. So why does the smart money love hated industries? Well, because when the industries are being hated, they're being hated because they're falling in price, right? So spotting industries and sectors that are on the rise coming off of those lows can lead to powerful trading setups. And of course, catching them as they emerge from their bottoms can be even more rewarding. So smart money tries to rotate out of high flyers, right, into those unfavored industries and sectors, right, to try to buy them low and get great bargains. And if they can, front run the crowd. That would be their idyllic situation. So that's a little foundational concepts going on here. So on this graphic, right, we're showing the business cycle, which is basically the economic cycle, right, and how we work through periods of contraction and move into expansion and then roll over back into contraction. And that cycle just continues. And as much as we try to obviate the business cycle because we have central banks that think that we can just keep going higher forever. That's another side conversation for us later on, Rick. Right. So, what this graphic, the other part of this graphic that's important for us is it's identifying that as the economy and as the markets are going through these cycles, different asset classes perform better or worse. Right. And ultimately, stocks, bonds, commodities perform best in the expansion cycle. Right. Bonds um, do better when the market's falling. All right. So green, those are the performers. The reds are the laggards, right, in each of those cycles. So that sets us up for this idea that the market follows the economic cycle, right? So the blue line here is the economy. The orange line is the stock market cycle. On this little squares above, we have what the person, stockcharts.com, who generated this graphic, identified 11 sectors that correlate with the spiders, the spider ETF family. But the idea here is they're identifying the sectors and how we, as the market cycles, we kind of step through which sectors perform. And of course, if these are the sectors that are performing in that cycle, then the extension of logic is that the other sectors are underperforming the leaders, right? Now, this is a little bit of economic theory, right? We can't always say that we just run in lockstep with this, because otherwise the economists would have nothing to talk about. And I'm not an economist, but I play one here every once in a while. So let's talk about this cycle a little bit here, right? So we're starting here on the left as the economy is starting to, or as the market is starting to cycle higher. Technology, discretionary, communication services, telecom, industrials, right? Those are the first guys who typically lead off of those lows. That transitions into materials, energy, consumer staples, right? As you get into the peaking markets. And then as the market rolls over, we get into the defensives, right? So this is kind of risk on. As you roll over, you get into the defensives where we move into healthcare, maybe I should say transition into healthcare, utilities, financials, and real estate, right? So that cycle does its little rinse and repeat. And so programmatically, a lot of the smart money simply runs this play, right? They identify where they are in the cycle, and then they start looking for the opportunities to rotate in and out of those sectors that are falling out of favor and hopefully get into the ones that are. And so we often see, because the smart money is trying to front run the rest of the market, sometimes they're a little too early and see these rallies that kind of die, right? But typically those rallies, you'll see it's a rotation into the next leadership that's just a little premature. They got out over ahead of their skis a little bit. So if we bring that back into VectorVest speak, we're not about getting out ahead of our skis, right? That's predictive. And what we do is we try to identify what's actually happening right now, right? What's on the dashboard. So in this same idea of waiting for the stock to stop falling and start rising, let's wait for the industry sector to stop falling and actually start rising. And the closer we can do that to the lows, then the more opportunity there is for us to catch the next wave. Make sense? Now that obviously then, as the market is cycling, ties into the VectorVest market timing system, right? Which helps us identify particularly those market lows. And Steve Chappell did a nice presentation this weekend. Hopefully you'll get to see it on the truth chart, which talks about the economic cycle. And of course, we track earnings, inflation, and interest rates as the three primary movers for our analysis. All right, so let's think of here, the key of this is that we have this orderly progression. Oops, not yet. We have this orderly progression through the sectors and of course the related industries to those sectors. Right, so we have a risk on phase, right, when we're in expansion, and a risk off phase where we're in contraction. Notice when we're in contraction, right, we're not performing well. So as money is coming out of the economy, as the economy is slowing, right, we can get into this sell everything phase, right, where business demand is falling, right, economic activity is slowing, and so that's not a time to be buying stocks, even defensive stocks, go down in falling markets. So hence our guidance of, you know what, when the market's falling, well, let's just get out of the way. We're trying to force something to happen that naturally isn't going to happen. All right, so with that, let me just make sure I counted everything I wanted to count. And we talked about the false signals that are out there. So we want to rely on empirical data to avoid the false signals as best we can, and then identify our opportunities. So here's a tool that we're going to use for today's little exercise. This is, or these are the SPDR ETFs that are identifying the sectors that we're going to cover or work with this afternoon. This translates, right? So they're the source of your analysis, I suppose, is pretty flexible, right? We're looking at SPDR ETFs here. We also have other ETFs that can represent sectors very effectively. Right? We also have the sector and industry lists from VectorVest, which we're going to work with here today as well. But just for the model and to set up the theoretical basis of what we're doing here, I'm going to start with these market cycle and SPDR ETFs. All right, so we're breaking down the market now into, or tracking 11 sectors within the market. Here is our market timing graph. And we're looking at a 1-year period, and you're probably fairly familiar with this, right? In that market pulled back into the lows. April 7th was the intraday low, but the closing low is actually on April 8th of this year. Here's our rally off of those lows, and of course our most recent little consolidation that we've been moving sideways here for a bit. But that's what the market looked like. Let's translate that into what the sectors looked like. So I'm going to use a performance graph. This is a graph type within the VectorVest program. On the layouts over here, this one is simply looking at the VectorVest composite, right? So this is basically a line graph of the same market timing graph we just looked at, right? So these are all drawn on closing data points. What the performance graph does for you is it starts everybody at a common starting point and then compares their performance on this vertical axis on a percentage basis. So now I can compare stocks to each other and to the market represented by the VVC or the SPX or whatever else you want to compare it to, as long as you can graph it. Right, so that's a performance graph. One thing, actually, let me pull it up here. There's one thing I want to show in that regard, right? If I go to a performance graph, here's my VectorVest composite. I can compare the VectorVest composite to the S&P. And by the way, it assigns these colors, and we're gonna fill this thing up. I call it the silly string pile, where it starts running out of colors. So things get pretty dicey here, but we'll work through it, right? So hot pink is the SPX, and I suppose that's appropriate because it's been the hotter mover. The broader VVC, which includes non-S&P stocks, right, has been underperforming the SPX. So that's a little bit of that comparative analysis, right? Starting from the left edge, we notice that the VVC, right, if I take that off, the VVC peaked here in December. The S&P peaked here in February. But they broadly correlate in directionally, right, in terms of their major turning points. And that's not surprising because they're both tied to the same economy, right? So the wiggles change, but the pivots are pretty well correlated. So the next move that I want to make after that is I'm going to add all of our spiders. So I've created a layout here that includes all those SPDR ETFs that we just saw on our little chart. To add those, by the way, you just type in their symbols and then save that layout, right? Save modified layout. That's how you can create it for yourself. But ultimately, let's just load this thing up, because there is something to be learned here. Take my date line. Let's go back. Where is it? There's the 8th. Look at that. Clicked right on it. So there are a couple things that we can divine by looking at this spaghetti picture. Right. So the first thing is we're all starting from the same baseline here, right? There were periods where some sectors outperformed, some sectors underperformed, but then some sectors were retreating while others were accelerating. That's that kind of rotation idea here, right? So XLY, where do you find XLY? All I have to do is find it in the list. There you are, way down here. Didn't turn on yet. XLY, the white line, right, peaked way over here in December, right? So it was the fastest mover up to that point, the last to peak. But then everybody ultimately rolled over into the market lows, right? So I've got it's a little bit rough here, but this V-shaped idea of the market fell into the lows, all the sectors fell into the market low, right? And hence in falling markets, majority of stocks in the market fall, right? That's the whole one of the driving concepts here. When the market rises, broadly, most of the stocks in the market rise, kind of by definition. And so we see after the low is put in, we see everybody starting to lift off the lows. And by the way, everybody lifted off the lows. Some lifted better than others, right? Presumably those that are at the top of the list rose the fastest, right? But au contraire, that was my French lingo for all my Quebec friends up north. Right, so let's make a modification here. So let's look at the fall into the low. And what I'm going to do is reset this on the graph so you can see it in real time, and I think with a little bit more definition. Watch how I cheat here and change my layout and then change it back, and that unchecks everything. Whew. Otherwise, that's a lot of clicking. All right, so the sectors that fell the most, I'm sorry, let's start with those who fell the least into that market low, were consumer staples. And let me reset this graph so that we're actually looking at a reasonable time frame, so we zoom in here a little bit. I'm going to go from the S&P peaked in February, so let's go from like the 14th up to the 8th into that low. And I'm clicking on my other screen just to get the dates in the calendar. 2024, that's not right. Let's try 2025 instead. That's better. All right, so we can see, right? We peaked in February, rolled over into the low. So these were the sectors. Now there are 11 sectors. I broke them into thirds roughly. I'm just doing the top 3 or the top 4, the bottom 4, and then I'm leaving out the middle 4 to kind of ease our eyeballs trying to look at 11 lines all at the same time. So here's consumer staples, XLP. XLU is utilities. See what they do, unfortunately, reddish orange and orange, right? I'm not a developer. So instead of changing all the colors, I'm just going to go with what it gives me. I think we'll be okay. Walk with me down the road. Here's XLV, which is healthcare, and XLRE, real estate. So how do I know that I got the 4 slowest moving? Well, everyone I click, there's XLB, on, off, on, off. It's lower, right? XLC, lower. XLE, lower, right? So I did that exercise, and feel free to double check me if you like. All right. But these are the slowest movers to the downside, right? Coming back to the slide that I was just showing there, if I can, I put this little inset in of our cycle graph. So who went down the least? Consumer staples, utilities, healthcare, and real estate. Right? These are the defensives, the risk offs, right? So they still fell because you're in a falling market, falling economy, right? But they fell the least. Well, how do I know they fell the least? Well, they fell the least because, or I know they fell the least because I added the other four that went down the most, which were XLK, tech, right? Our little darlings, didn't think that could ever go down. Discretionary XLY, telecom, XLC, and financials, XLF. Right? So these guys falling the fastest, right? Everybody in downtrend. Again, you can kind of see the organization there. But those guys who fell the fastest, if I come back to my little slide, what did we just say? Technology, discretionary, telecom, financials, a little bit of the outlier. Right? So that's those are the rotations. Now the big rotation happens when you come up off of the lows. Right? So now I'm going to change up so that we add a little time frame after the low. And so I chose as my time frame late April when we got that first green light. All right, so let me do it this way. I know I got to keep straight in my head or I am in the game here. Let's see if that gives us enough time. Yeah, I'm going to give us a little more time than that, actually. Let's come out to May 6th here. All right, that gives me a little bit better perspective. All right. So coming off of the low, who led off of the low? Right? So who was the fastest basically in that first month after putting in the low? Who came off the fastest? Well, you might think that it's this top line, right? But actually, these were the laggards, right? These were the defensives that fell the least. So they kind of are getting a head start. And actually they're flattening out. They're moving higher, but they're flattening out. These other guys are actually accelerating, right? The slope of those lines. So you can see the rotation is out of the defensives back into risk on. Make sense? So who's actually leading? Well, to find out who's actually leading, I need to reset my time frame. So let's reset our graph so that we're starting from the low. That's my slide in case the program crashed or something. I've made sure I have my backup here. All right, so now we're coming in from the 8th. And then let's just extend out. And here we have that same kind of performance. So here are the leaders. The leaders were, and maybe I should get my graph consistent here too. My leaders were technology, industrials. Actually, let's do this. Clear my screen again. All right, so my leader's coming off of that low, XLK, industrials, XLI, where did you go? There you are right next to it. Telecom, XLC, and materials, XLB. Right. Consumer discretionary, by the way, which was one of our prior leaders, running a close fourth, or close fifth, but I said I was looking at the top four. So there's our performance. And again, all you have to do is click on these other ones and you can see if they're out or underperforming those four. Takeaway on the slide, then. All right, who's leading off of the lows? Technology, industrials, telecom, materials. Right? Close enough to rhyme. I hope you agree. Right? Now, they didn't nicely line up in order, and that's not how the market works, right? But ultimately, they're just running the playbook. And we can use that to our advantage a bit here. But the system will just naturally, and we're going to cover this next, the system can just naturally lead us to who is making the better gains. As soon as you can see that Rick was already doing some of that in his prior slides where he's looking at delta on the price of the sectors, which is what we did last time I was here, right? So I want to take this next step and say, well, okay, that was through, a month. That was the first month of that performance, right? If I come up to current, then let's look at who's leading. And I guess to do that, let's go back to our graph. So I'm just going to come now to current. Right, and so who's leading currently is XLK, XLC, XLY, and XLI. XLB fell off, replaced by our fifth place runner, consumer discretionary. Right, so a little give and take in there, XLB, starting to roll off. Right, and so if we start putting on these other players, we see this transition where, man, tech has just been running, right? But a lot of these other sectors are kind of flattening out, kind of slowing. And what we see in the broader market is we're kind of running out of gas here a little bit. Still have uptrends in place, but you have a lot of these sectors that are rolling over in the topping market. So the thesis here is that we can identify the sectors and industries that are accelerating and decelerating in the current market environment and favor those industries. Then as a sweetener, when we come off of market bottoms, I can identify those that are rotating off by virtue of that movement. Make sense? So our mantra is that we want to buy safe, undervalued stocks that are rising in price in a rising market. And I might add, in rising industries and sectors, right? It's a sweetener. Often you'll find that top VST stocks are in leading industries and sectors. but they also can be high flyers that are starting to roll over when you're late cycle and you're seeing other market rotations come in. Right, so that's why we like stocks that are continuing to move higher. But let's couple that with the industry and sector performance. Right, so we want to identify industries and sectors. We're going to use the Unisearch tool to find who's moving, which of these sectors are moving. Now, this is true with industries as much as it is with sectors. Of course, in the US, we have 220 industries. So talk about the spaghetti noodle stuff, right? So I'm focusing here on sectors, but the principles are translate, right? Sorry about that. They don't know that I'm working on a Saturday, apparently. All right, so let's go into the Unisearch tool, and we're going to show you a little search that I built, and you might notice very similar to the search that Rick had built, but with a little variation here, right? I'm using two deltas, and I've showed this before, where we're looking at the sector's price, and I'm looking for return of sectors. So I'm looking for the sector's price. I'm looking for the percentage change in that price over the last 10 days, and I'm going to sort that result descending. In fact, let me show that to you in the program. That'd probably be more helpful because I can go into the search itself. All right, so once you've picked the sector price, sectors price split adjusted, right? Choose delta as your operator. And then when I get into this custom delta field, 10 days sorted. Now I can specify that it's greater than 0 or greater than 10% if I wanted to, right? Got a lot of available options here in terms of how I want to analyze that. But I'm looking for stocks that the sectors that have made the best gains in the last 10 days, but are also rising in the last 20. So this criteria looks for the 20-day delta of that sector price to at least be above 1, meaning that in both time frames I'm rising. So 20 days, 20 trading days is roughly equivalent to a month. Right? So if I was, 11 days off the low, then maybe I don't want 20 days and I could drop it or use a date specific. But the idea here is I'm looking for stocks that are in uptrends that are continuing to rise. And in fact, continuing to accelerate because that's what the sort is doing for me. It's showing me the fastest 10-day advancers. Now, for the other criteria, I'm looking for RT rank. So let's explore this idea here a little bit if you don't know what RT rank is. So in the Viewers tab, we have a sector viewer. And every sector has an RT score. If I sort the sectors by RT, then you'll see the ranking aligns with their place in the list. Now, when you have a tie, the sort is saying that the tiebreaker goes to the alphabetical sort. All right, so when you're tied, you're tied. But ultimately, you can see that we have 41 sectors. Right now, paper is doing the worst. Right, it's actually in decline. Electronic is doing the best, just slightly outpacing steel and instruments. And because they're tied, utilities. All right. So interesting that you see some of those names popping up, right, in terms of market rotations. But that's the RT ranking. And so it's taking a look at this from a different perspective. Right. I can see that industries or sectors are accelerating with my search, but it doesn't tell me where they are relative to the other sectors in the list. By the way, all the sectors with an RT score higher than 0.96, this is the VectorVest composite, so the broad market, everybody above the broad market is outperforming the market currently, at least on an RT basis. All right, so When you look at this list, we call this the high flyers. These are the high flyers. These are the stocks that are the sectors that are in the strongest uptrends at the moment, but it doesn't tell me if they're accelerating or decelerating. Right? And for our exercise, I'm really interested in knowing whether they're accelerating or decelerating. So I'm looking for that RT ranking to be less than. So if it's in first place, that number is lower than 40th place. So I want the ranking to be less than 30, which means it has moved itself up out of the bottom 25%. This is an approach that Dr. DeLito made popular when he was looking to trade oil, where basically the bottom 20, 25%, looking for stocks that are coming up, or industries and sectors that are coming up off of those lower rankings as evidence that they are making the turn. The next line you might be familiar with. If you're familiar with the MPI, we look at a 5-day moving average of RT and a 40-day moving average of RT. So here I'm looking for the sector's RT to be crossing above, or be currently above, the 40. So I'm not looking for the cross. I'm just saying it currently is. So this search is going to get me to a list of candidates, right, that are rising in both time frames, that have moved up out of the bottom 25% of sectors, and are in accelerating price trend because the 5-day moving average of RT has crossed above the 40. Right. This also sets us up to do some of our kind of usual RT or MPI analysis, right? So if you're familiar with the MPI, then that translates, right? And that's another thing I like, is that we have kind of a more uniform approach that we can use consistently through this methodology. All right, so I'm going to run that search on the 6th, which was the month after the low that we were looking at before. All right, and let's take a look at the graphs here in just a moment. So let's change our date back to 5/6. Run the search. So I get a little bit of more real estate here. I'd like to at least be able to see, well, there's the VectorVest composite, right? So I know that everybody above the VectorVest composite is outperforming the market. Makes sense? I don't know if you can see that better or not. Right, so on the 6th of May, these were the guys that met our search criteria. The electronic sector had the fastest price movement in the 10-day time frame, which was a continuation of this 20-day trend that was already positive. Let's take a look. I'm going to right click and let's look at the sector graph. So I'm still at the sector level, but I'm interested in identifying or confirming that these sectors are actually turning and making the turn, as I like to say, in their performance. So I'm going to start off with the MPI layout. Right. Add to that MPI layout a couple things. First of all, you see the RT rank here. Here's the RT moving averages, right? The 5 and the 40. And then we also have the price moving averages as well. I have RT rank on the bottom, and I like to add earnings too. This is the average earnings. Do it this way. Put the RT rank on the bottom. This is the average earnings for all the stocks that are in that sector. So Goldilocks scenario, right? I'd have price moving up above the moving averages with the RT 5 above the 40, rising earnings, and an RT ranking that is steadily rising above our cutoff level of 30. Make sense? So that's what I'm looking for. And as I scroll through these candidates, I can make a judgment on whether or not they pass muster. So 5, 6, let's find our date. Are these my dates? Here's 5, 6. So it passes muster. Computer, looking good. Auto and truck, looking good. Machinery, it's starting to get questionable here on the earnings, right? But I'll squint at it funny and let it go. Aerospace and defense. Bear with me 1 second here. There you go. Media. RT ranking is actually trending lower. 5-day moving average of RT is above it technically, right? Numerically, it's above it, but trend kind of, so media, no, not so much. Steel earnings are in decline, even though they've made a run for it now, right? We just saw them at the top of the current list. All right, but what am I doing here? I'm identifying the sectors that are actually on the 6th here, making their move, and from the MPI analysis, right? Those are market indices, so let's go to container, right? Whether or not they met on the 6th, and then now you can see whether or not they performed after that. Now, container obviously rolled over, and that happens in life, right? But generally speaking, identifying those top movers did a pretty good job of finding us sectors that performed well all through this time frame. Right? So rising, well, positive and rising RT, stable to rising earnings per share, RT rank above 30th and rising. Right? We're looking for all of those things to be coming. Now, Jerry just did, I guess this was in the 2-day seminar, right? He talked about sweetening the NPI performance by looking for stocks that had RT values below 1. Right? So there are things we can do to help us identify bottoms, particular bottoming opportunities, which are the best opportunities for those explosive moves. But, part of the MPI analysis is this continuation idea, right? Where, okay, you had that initial thrust, it consolidated and weakened and then advanced again. Don wrote about this, Don Reitzma wrote about this in the essay in Canada for several weeks, right? There are a couple different things to look for in terms of these consolidations. Are they consolidations or are they breaking down? Should I stick with it or should I bail, right? But you're going to come back to these guys late stage and say, well, gee whiz, okay, so the RT had a positive crossover, price is still operating above, earnings are still rising, RT rank is stable. Okay. What I'd want to watch out for, and container was the most egregious example, right? When I come back and here's the positive crossover, rank is falling and below 30. Earnings is doing okay, but obviously the price is not trending higher. So I can now start identifying the sectors that are actually moving, doing what I need them to do. Well, I'm going to guess, unless you're going to trade the sector, which you can, by the way, another slice of this pie is you could just trade the ETFs. Right? You don't have to go looking for component stocks, trade the ETF. But how would I do that? Well, you do that by drilling down on the sector that is performing. And then because you're at the stock level, run the MPI on the stock, right? So electronic was our top performing sector. Look at the stocks within the sector. The default sort, because you're looking at a stock list of stocks in VectorVest, is going to be by VST. If you'd prefer to resort them by RS or by CI, whatever, world is your oyster. What I would suggest you do, though, is cherry pick from the list, and I would eliminate the pink sheets. I might eliminate any that don't have average volumes over 100,000 shares. Right, so I don't see any. All right, so depending on your volume requirements, right, whatever your position size is, you can do that. You can put these in a watch list of the ones you like, but ultimately I want to look at their graphs. And what was this on 5.6? I think it's what I did. Yeah, 5.6. So where's 5.6? May 6. Let's clean up my graph here just a little bit. Right. So the same, well, I shouldn't say the same, but the usual MPI analysis. Stock in uptrend, operating above the moving averages, 5-day above the 40, rising earnings. Right. So without going through every graph here, because I'm getting a little crunched on time, right? You're finding some really great candidates buoyed by a rising market and rising sector. And the MPI makes them really easy to identify. All right, so that's the methodology and how you can use the sector and industry analysis to find great candidates coming off of bottoms, right, which is kind of our best opportunity. So particularly when the MTI is down at those bottoming levels, right, that is a great way to identify bottoming markets. But even in trending markets, we can still use the MPI effectively, always looking for the new leadership that's coming on. All right, so some resources, because that was kind of an amalgam of some really neat ideas, and I want you to be able to go do some homework if you're built that way. Like Rick, you need to look under the covers here. All right, so measuring change for better decisions was my presentation from April here, where we looked at industry and sector delta searches in particular. So that might be helpful for you. The VectorVest Market Timing Indicator after a major market downturn, a series of essays done by Don that started September 26th. That's in the Canadian product. So if you aren't used to tripping along in the Canadian product, well, now's your chance, right? When you log on, choose the Canadian flag and just go to the views and look at the essays. Get ready to go bottom fishing was a special presentation that Steve Chappell did. Now, we talk about bottom fishing a lot, but in terms of an all-encompassing presentation, I like this one that Steve did from December of 2021. And that will help you with this idea of, the bottoming levels of the MTI and the buy-sell ratio to identify oversold market conditions as opposed to just your garden variety pullback. Most of the rotation happens after the corrections. And then mastering market moves, the power of the near perfect indicator. This was the 2-day. Now this is behind a paywall now. So if you did go to the 2-day, you should still have access to it. Otherwise, I don't have a good solution for you there. Other than we have done a lot of presentations on the free side, in the university, and the near perfect indicator for you to review. You won't specifically see Jerry's resorting on RT, but I think that'll help you along just the same. All right, but that is what I had for you this afternoon, and hopefully I generated a couple ideas. I tried to keep it linear as much as I could because I feel like I'm tying a couple strings together here. So I'll read your commentary to find out if I did that. But in the meantime, let me hand it back to you, Rick. You ready to take it?
Thanks, Todd. Yeah, I'll take it back. I'll take it back. Thanks again, Todd. Excellent, excellent presentation. All kinds of useful information there. And there was a question, I know, Gil, near the end. I know that the MPI, you'll need VB Premium. Do you also need VB Premium for the customized search or anything else here? I don't believe you need that for, doing anything as far as if you're talking customized search, like a watch list filter search. Don't think you need premium for that. Of course, you'll need Pro Trader if you're looking to do any of the Pro Trader
Well,
searches.
yeah, so any moving average or crossover searches that you want to do require Pro Trader, but you can cherry pick those instead. So if you, for instance, didn't have the ability to search on the moving averages, I would start with the delta searches to get you to identify the sectors that are moving, then just start graphing them and cherry pick from the graphs those that have met the criteria that we just went through. Right. So you'll have to weed out a couple that have the 5 hasn't yet crossed the 40. Okay, like it's doable. Right. The
Yeah,
whole thing about Unisearch is you could do it all, just Unisearch makes it a lot faster.
yeah, exactly. And I was asked by, I think it was Bart, for, I think, parameters for some of those watch lists. Some of them had parameters like blue chip bargains. Others didn't, like that 2024-02 that I was talking about. That was just a bunch of random stocks that I picked up at certain times for trade setups and was trading in and out of. But the most important point there is, and I kind of did it. I ended up going back and doing it in the US software was, something that most people recognize. The S&P 500, for example. If we look at the watch list, well, there's 503 symbols in there. And if I do a watch list filter search for stochastics moving above 20 on the S&P 500, and I run that search, I did that, I end up with about 23 stocks out of the 503. So I only have to look at 23 charts versus 503 charts for that. All right, so hopefully that was the main point to garner there. All right, so let's look to close out. All right, folks, a special presentation this week was entitled The Truth Chart, very timely. And this was presented by Mr. Steve Chappell, Director of Global Trading Systems Development. If you didn't get a chance to watch that one, make sure you do that. And just like Todd's last slide, we're at the point where we'd like to thank everybody for coming out and spending part of their weekend with us. Hopefully you'll enjoy the rest of your weekends, and we'll get back into another trading week to see what's up. But yeah, we'd like to thank everybody. As usual, if you do need any help with anything at all, don't hesitate to reach out to product support and training at 1-888-658-7638. As mentioned, this is broadcast on the VectorVest YouTube channel, so recording will be available pretty much immediately after. And you've got support email down below as well, support@vectorvest.com. But for now, we've kept you a little bit over, so we will draw to a close. Stay safe and healthy out there, folks. Have a great rest of your weekend, and we'll catch you back in the markets next week. Bye for now.